The Army Air Forces has announced that a flying disc has been found and is now in the possession of the Army. CBR Street Gang, this is Almighty, standing by, over.
Hello, hello, hello. Ooh, my voice is cracking already. Let me know if you can hear me across the various streams. We have YouTube, X, and Twitch.com. If you are in one of those streams, go ahead and let me know if you can hear me okay. If you can't chat in X, at least you can do that little thing where you tap on the screen that shows a heart or whatever. Go ahead and hit that, and that will let me know if you can hear me okay. If you are in the YouTube chat here, go ahead and let me know if you can hear me as well, as that is the main one that I can see reliably. And we're going to get started here very shortly. Okay, so it looks like you can hear me okay. Let me go ahead and bring the music down. We're going to get rolling here in just a moment. All right, so let me get the music turned off on my side and we're going to roll right into it. Hello and welcome to Landy's Crypto Corner. Today is April 22nd, 2024, and we are going to be discussing, some price action for Bitcoin post-halving here. We have seen a few interesting things happen in the lower term and daily time frames now. Excuse me, I got to move a few things out of my way here. All right, so Bitcoin has recovered the $65,000 area here on the daily. So we see that that was the first wick high or swing high from 2021 coming in April of 2021. And we had a close above there on Saturday, 4/20. That was the halving day. We did get another subsequent close right on it, basically at 64,950 or so. And to be fair, it's like 64,900 is technically where that wick high is. It's not quite $65,000. So it did close inside of that area. More importantly, Bitcoin recovered this prior higher low that it did fail at around this downside support area. Then prior to testing into the actual monthly closing zone down here between 61,350 and 58,800. We did see expansion down into this zone, and Bitcoin has regained now the lower first standard deviation, the overhead resistance, spent 3 days tagging that, and now it's up to the basis band. So it hasn't quite swung the ever important area that I am looking for just yet. It did get close, and that's this wick high over here at around $67,000. So if Bitcoin can regain around $67,000, especially on a daily close, even if it's just slightly, that will raise the targets. Of course, if it closes above the basis band, that is a positive sign for the bulls as well. That's around 66,500 to 600, depending on where price is oscillating around it in real time. So above there and above $67,000, this swing high from the 15th, that was last Monday, then I would be targeting somewhere around the next overhead resistance, which was the prior all-time high at $69,000, to right there around the upper first standard deviation, slightly above it. You can call it 69,500 or so. Now, if Bitcoin fails there, I'm not looking at that as a doomsday scenario right off the bat. But we do want to see that area recovered for the bulls if this is going to end up resolving pretty quickly to the upside. So above the upper first standard deviation, you can see the upper second standard deviation of the Bollinger Bands is coming in around $72,000. That's actually this close open right before putting in the close open all-time high and the all-time high wicks up here at 73,835. So in this case, recovering that area, very likely we see the highs get swung at minimum. If we do see closures above there on the daily, we still need to see the all-time high closed above on a subsequent daily, whether it's all in one candle or in the next candle, to kick off expansion to the upside. Right now, Bitcoin isn't in a truly expansive posture, so a compression to expansion. We saw the expansion to the downside, and this is technically, as it stands right now, a bearish retest. But overall, this is a bullish consolidation. It's holding supports to the downside. One thing to be aware of, if Bitcoin does either fail here in the lower term timeframes, or come up a bit more and head in around $69,000 to $70,000 and fail there, like swing it and then come back down and subsequently lose 65 again here at that April 2021 monthly swing high, then I would keep an eye on that lower first. Anywhere below there in terms of closes, and it would be more likely, especially if this wick low from Saturday was dropped at around 63,000 to 63,200 or so, depending on your exchange, then I would be entertaining a possible run back into retest the lower second standard deviation in this monthly zone down here. So this is a monthly closing zone. This was the October of 2021 monthly closing high. So it actually did put in a closing high there. And then just below it, of course, we have the March of 2021 closing high. This was also a quarterly closing high. So this is at 58.8. I would be entertaining at minimum a run back to retest those areas. Of course, one of my favorite setups is expansion to a retest of, the lower second standard deviation for those of you that have been around a while. That is one of my all-time favorite setups. Doesn't mean that it's going to play out and not get closures below, but in this case, even if it did start closing below the lower second, it still has to break down from the wick lows now, coming in at around 59 to 59.5. There's a wick over here at 59,224. So, and even in that case, as long as it's closing above the quarterly at 58.8 on the daily, I'm not looking for too much further downside. It could even swing below, as I've mentioned prior, go for the meme pullback number at around 20 to 22%, which, in general would put Bitcoin at around, I think it's like 57. Let's go ahead and double check. From the high, pull it down around 20% is going to be right there at the monthly at 58.8. And even 20% even is inside of the monthly zone here. So, it's kind of already hit that. We've gone for a 19.32%. You could call that, in the general vicinity of that meme pullback, about 20 to 22. But if it was going to head back down and retest, 20% puts it at around $58,800, $59,000. 22% is going to put it somewhere around 57,500 or so. But essentially, it could wick down below, but as long as it's closing back inside of this March 2021 monthly and quarterly close at around 58.8, things are fine. And right now, Bitcoin looks pretty strong on the daily. This is a nice move up. If it can sustain and of course, get above $67,000, then we can raise our targets to that $69,000 area as the next big area of interest. And as I said before, above there, 70 to 72 by the upper second standard deviation, swing the consolidation highs up here. And then, of course, it's got to take out the most recent wick high there at just under $73,000 at 72,777, and then take out the all-time high there at a close of 73,135, and then, of course, the 73,835 here on spot price, and then we're looking for expansion possible to the upside. I would like to see a little bit more compression. We could also see a scenario where we see a quick compression to a move through and then an expansion to the upside if it does choose that route. So essentially what I'm looking for is for Bitcoin, we might have already seen this major low. So, if it does come back down to retest this major low, then, I would look at that as opportunity personally, not financial advice. Do your own research. Everything can go to zero. But, when we take a look at momentum on the daily, we do have an official shift. Of course, we have red DMI. I'll get into explaining that kind of stuff another time. But what's more important is this pivot here is at 61,610. So Bitcoin's trading pretty far away from the momentum pivot here for the daily Stoke. Now, this is a regular Stoke, not a Stoke RSI. Stoke RSI measures the velocity of the RSI, whereas a regular Stoke measures close over close price momentum. So we do see a nice momentum shift. We have a nice low in This is also on divergence. It's long-term time frame divergence on the daily, but it is here. It's not going to populate on most indicators. But if you look back here, essentially it's the daily hidden bull div is coming from this prior consolidation before the move up to make new all-time highs, and that's in the $50,000 area. The low coming in specifically at 50,500. So we do have a drive of bullish divergence. It is active. Bitcoin's RSI is also above this 12-period moving average. So, playing around the mid zone of RSI, not unheard of. It could even come back and back test the SMA, which would put it at around $64,500, and test down a little bit. As long as it's hanging out above the lower first here, which is at 63,800. I'm not looking for too much further downside. If it does start closing below there, of course, watch that Saturday wick low. That's coming in around that 63 to 63.2 rather. When looking up to where the bullish control zone is on the other side of this, if it does choose to continue up and away, then we're looking at somewhere around 72,800, which puts Bitcoin right back at the highs. And the potential to go much, much higher is there. We'll get into that in just a moment, but we can see here on the bull critical zone, which Bitcoin is a fan of tagging in bull markets, pretty critical, obviously, but that's sitting right there at $100,000. So let's go ahead and take a look at that, because that is a big area of interest. But there's, in my opinion, going to be some checkpoints or areas of overhead resistance in the blue sky scenario. So let's go ahead and pull a fib on the local range here, assuming that Bitcoin was to pull out of this range to the upside, not make any subsequent lower lows. You can pull this wick over here. It's not worth it, in my opinion. You're not going to get that much of a different read on price action targets to the upside in terms of fibs. But in general, I would be looking for Bitcoin on making any kind of new higher highs to come up somewhere around that upper third standard deviation, which is just shy of $75,000, to the 1272. The 1272 is at $78,000. I would view this as a zone of interest. Above there, another zone of interest between the 1272 and the 1414 here. That's coming in between $78,000 and $80,000. To be fair, the 1414 is a little bit deeper than that. It's at about $80,700, but around 78 to 80 would be the next big area of interest for me. Above there, the 1618, which is coming in at around $84,300. So essentially above $80,000, or that 1414 on any daily closes, and I would be looking up to somewhere in the mid to low $80,000 region. And above there, I start targeting the 1786 to the 1888. That's coming in at $87,000 to just shy of $90,000. Above there, the 2 spot, and that is coming in at 91. And then we have the 272 to the 2414, which would be a logical area on any kind of an expansive move to be looking for larger, longer form pullbacks. And that just so happens to be at between $97,000 and $100,000 even. That is also, as I had mentioned, the RSI's bullish control zone, the critical zone. That's the 80 read up here. That doesn't mean that Bitcoin can't push higher than that. It certainly can. You can see the user alert level up here, which is at around an 85 read, which Bitcoin previously tagged back here in February. It's coming in at around $130,000, which just so happens to be another target on a longer form fib. I don't believe this fib's going to show that. I guess the 3 spot is right there. No, that's at 113. Sorry. But we can take a look at potential further upside targets, longer term, of course. I don't think they would be immediate targets, but we can go to the weekly. And because we have a really nice swing high set here, it's not on a close, but it is on a swing high. You can technically pull swing high to swing low of the last move and get that as well. There's a few different ways you can pull this, and there's different schools of technical analysis that will read this in different ways depending on whether you are a Elliott wave person, or whether or not you're just measuring percentages of moves, or if you have your own system for that stuff. It really depends on how you want to use them, but good practice would be swing high to swing low. We do have a confirmed swing high. We do have a confirmed swing low. Now, one of the things that I will tell you is actually, technically, it's not a confirmed swing high because that wick low, did it get closed below? Let's see, where's the low? 64,505. Did we get any closes below that? Yeah, no, we did not. So I guess technically, I mean, you're closing below the body, you can pull it, and it's going to give you generalized areas. But we see the 1272 coming in at 88,000, the 1414 coming in at 96, 1618 is coming in at 110, 1786 at 123, 1888 at 130. Of course, that is that daily user alert level. A more relevant fib would be the confirmed closing swing highs and confirmed closing swing lows, which is actually from the move prior. And that's going to be from this move up to around $50,000 to that 24,700 or so. And that is going to be a much more viable and accurate fib, in my opinion. You can see even that Bitcoin is hanging around the 1414 right now on closes, even closing directly on it there at around that $65,000 level. To be fair, it did close slightly below it, but it's basically 64,500 on the weekly here. In this case, you could pull dailies to get those confirmed swing highs and confirmed closing highs in for the other fib to be relevant, but we are in longer term time frames, so I would suggest using a weekly in this case. Now, the 1786 is at around $83,000. That's that mid to low 80 region. The 1888 is coming in at $90,000. That is by the upper third standard deviation on the weekly. So if Bitcoin were to push up above its current 1618 from this particular pull, you can see that it's holding around the 1414 to the 1272, which is coming in at $59,000 and $65 respectively, which is right in support areas. You can see the upper second standard deviation on the weekly is at $78,000. Go figure. On the daily, our zone is between the upper third, which is at $75,000, to where the current weekly upper second standard deviation is at 78. So you can see how these things kind of fit together. Above there, we would target somewhere around 78 to 80, and then the mid to low 80s here by the weekly upper fib area at the 1786 at around $83,000 to $84,000. Of course, above there, some of the further extension targets from the local range coming in around that $90,000 between the 1786 and the 1888, coming in right around where the 1888 is on this particular poll. And then above there, you've got, mid $90,000 region 1272 is coming in at 116. And then you've got the 2414, which is coming in at $128,000. Let me remind you again, what was that user alert level here on daily RSI? User alert level was at $127,000 to $128,000. So all of these things have a lot of confluence with each other, pointing to some major areas. I would be aware of the $100,000 areas. You're likely to see a lot of profits taken, and probably lead to a nice move or a leg up with some pit stops in between at the areas discussed. But more importantly, we're probably looking at some of the whole numbers like $100,000, 110, 115, 120, 130 if it does make it there. To be very, very relevant areas for longer term pullbacks, possible consolidations, and maybe even highs. This particular cycle, if it does pick up from this particular range, I think will be a bit of a shorter cycle. I've mentioned this. One of the main reasons why I've mentioned this a few times now is because of the monthly. We do see, a nice pullback so far to that upper second standard deviation and a run to it. But the monthly Stoke is turning over on any closes below 72,122 by the end of this month. But Bitcoin could have a pretty nasty pullback, and you're going to see a lot of people go, "Oh, it's over. That was the bull market." And it's likely not going to be the end of the bull market, but we could see very deep corrections. One of the main reasons why I would say that it would be unlikely on any massive pullback to be the end of the bull market, but instead a bearish trend within the bull market on, maybe even a weekly, not for bearish trend. That would be a little bit more of a distribution look if it started to do it on the weekly. But in this case, on the daily through to the weekly, we could see bearish trends emerge on major pullbacks. But we can see that, we've got, where is the DMI here? DMI on the monthly is all the way at 21,500, so I would not be concerned. In fact, I'd be looking for the monthly to actually come down and bullishly reset at the end of this month. And we'll talk about this later this month, but we can see that Stoke is well and pointed to the upside here. Nice momentum to the upside, and the pivot is at 31,300. Now, I'm going to revisit Caprioli's indicator. He did mention on one of his, I don't remember if I saw it on X or one of the other posts, that it's not going to update right away, but I will reference it again because it does give you a good idea of where the floor is for the cost to produce Bitcoin. And it's not currently updated. I was expecting it to update after the daily close for the halving, and it didn't. So I'm a little unsure of what factors it's looking for before it does update. And it could be that the halving hasn't been taken into account in the indicator yet for the production cost, and that's kind of what he alluded to. But in this case, the 2-month, which is going to close at the end of this monthly candle in 8 days and 6 hours, is very close to getting full-on expansion to the upside. And it's not there yet. It needs to close above the upper second standard deviation, which is coming in at $68,000. So closes on the daily above $69,000, $70,000 especially. We're looking for this to likely follow through by the end of April's monthly candle and 2-month close above the upper second standard deviation, which would further increase the volatility factor. So in this case, we see a 43/32. So it's just kind of getting rolling. This is also where we have observed a normalization in volatility for the first time in Bitcoin's history, coming off of the low in 2020 and the volatility low in 2022 coming into 2023. In fact, it didn't really normalize until late 2023 coming into 2024. So this is the first normalization that we've seen in Bitcoin's history, and this is encouraging because this does mean that we have a baseline to look for when referencing volatility. And this is going to be very important going forward. The next big time frame to get normalization would be the 3-month. So while I do think if Bitcoin gets rolling sooner rather than later to the upside, I think it has a very big correction in store, a bullish reset on the monthly. Everyone's going to call it the top forever, for a long time, because hyperbole is the name of the game. But in fact, I do think it would go for probably a longer form reset in that monthly momentum, which would then, of course, follow through with further upside on the 2-month and 3-month. And because we are talking about very long-term timeframes here, there's going to be months where it would be very dicey for people in terms of trying to make sense of what's going on with the macro trend. But in this case, even looking at the quarterly, it's pretty clear. quarterly did break out and close above the prior all-time high. So the quarterly close came in at 71,320. So this is a confirmed breakout to retest, and look where it retested. On the quarterly, it retested right around the prior quarterly high close. And of course, that is that 58.8 quarterly and monthly level that I showed you earlier. If Bitcoin is going to continue further to the upside, you can also see that there is significant overhead resistance initially during this quarterly candle at the upper third standard deviation. Now, Bitcoin typically passes above this in between quarterlies. And we can see that right now it's at $90,000. So it's lining up with all of our, shorter term upside targets. And in this case, I would be looking for, likely if Bitcoin does take off sooner rather than later, let's say, I'd be looking for a shorter term top that will get everyone calling it the macro high, and likely bull market over talk everywhere. And what you'll see is that we're likely going to see Bitcoin come down pretty significantly. I do not think that $50,000 to $60,000 will be breached. As I'm going to show you in just a moment, that is going to be the production cost basis for Bitcoin. But, I do think that Bitcoin would be in for what I would term as a macro sideways and up consolidation, with much, much deeper targets over the longer term timeframes, like the 2 month and 3 month, 6 month as well, that are going to be in the cards in the coming years. But maybe, I could be wrong. By the way, it could take off to like some insanely deep targets from here, and completely change my view of it. But my read on it as it stands right now, that you're probably starting to see others come around to as well. If you do watch other, technical analysts that are not just influencers, they are starting to see it this way. I've been talking about this for a very long time. I was in the camp of Bitcoin's going to make a new all-time high prior to the halving. That did happen. I didn't have a number set, but I did stick to my guns saying that Bitcoin was likely to make a new all-time high prior to the halving. And it even had a chance, by the way, last year, prior to 2024. Of course, we saw it immediately start running and into the early part of 2024 rather, and make that new all-time high. But, it did have a chance to do that late last year as well. If it does go for like really, really crazy deep targets from where it is right now, you're probably going to want to pull, the quarterly, just to see where some of those deep targets come in. It would have to pass $100,000. Go figure. That is one of our major areas. The 1272, the 1414 here is at $130,000, 128. Again, that is the daily user alert level. And if it's got more in it, it could go for the 1618 at 173, the 1786 at 224, the 1888 at 260, or the 2 spot up there at 307, to get further expansion targets in a just massive blow off. We're probably looking at the 272 to the 2414, which would put Bitcoin at around 462 to 571, almost $600,000. Now, I'm saying those numbers. I am not in the camp currently that those are viable targets in the near term, meaning this year or even in 2025. I do think that Bitcoin goes into a nice bull run, tops out much sooner than people think, pulls back and holds areas of interest to the downside that are much more relevant, does some more consolidation, and then hits some of those deeper targets in the coming years. I am very interested in we'll call it on the deeper end of the targets, around $130,000 to $150,000. That's my deep end interest zone for this current setup on the monthly as it stands right now. That does not mean that it doesn't top out in the 90s and not hit 100, right? Like it could still find significant resistance on the monthly, come back down, reaccumulate, higher low its way up to further deeper targets than that later on. But for this year, I am a little bit more conservative than most. And there are many that are starting to come around to that view. And we'll see if that holds true. Of course, it's all conditional. So we're not trying to I'm not trying to give you these pie in the sky targets that don't make sense. Everything is conditional on a closing basis. So closes must follow through at minimum on the daily through to the 2-day, 3-day, 4-day, 5-day, weekly, and then of course up to the monthly, 2-month, and quarterly in order to make some of these even local upside targets from the local zone and consolidation viable targets. So initially, as I've mentioned many, many times now, above the current all-time high, big zone of interest between 75 and 78, then 78 to 80, 80 to mid to low 80s, and then above there we can start looking at 90,000. So deeper 80s to $90,000, possibly $100,000. And then I am looking for, a potential maybe even swing above, but some sort of a consolidation structure or further pullback. There's going to be a lot of profit taking in that area at that whole number, I do believe. Now, above there, I think Bitcoin could go for it. 130, 150, not out of the question by any stretch of the imagination. I think that would be an easy move from there. Doesn't mean that it would happen. But I do want to caution that whenever you see Bitcoin top out on the monthly, everyone is going to get the bearish, even me, I'm going to get bearish, but you got to keep everything in context. Bullish on the very long term, bearish in that monthly and shorter term timeframes below the monthly. And from here, one of the big things that I would be looking for as the cost basis model has not, production cost has not updated just yet, but currently when this updates and as it stands right now, because the block reward has been halved, Bitcoin's cost production, the lowest cost production to produce a Bitcoin has gone from this $30,000 number to $60,000. It has doubled because we halved the actual block reward during the halving. So when this model updates, I will show it to you again so that you can see it visually. But that puts Bitcoin's production cost right around its current range lows. Now, that does not mean that Bitcoin cannot dip below there. In fact, we have seen this many times in the past, but every single time that Bitcoin has done it, it has been a beautiful opportunity. So the last time that we did see this here on the index, we saw it in what? The actual macro lows is when it dipped below and closed below production cost. This means that if you were buying here, you were buying Bitcoin lower than it cost to produce it. Now, we see that there was difficulty adjustments. So hash rate difficulty did adjust down, which means that that production cost did dip. But in this case, you had a wonderful opportunity to get in on 1, 2, 3, 4, 5, 6 closures below what it costs to actually produce Bitcoin. So big buying opportunity. The other times that we have seen that have also been wonderful bounce opportunities or trade opportunities. We saw it dip down below on a wick back here in 2022. Excuse me, I was trying to hold that cough. It dipped down below in 2 wicks before getting a nice rally up to top out around $25,000, but this was roughly at that $17,500 area. Bitcoin traded down below in intraday, below the actual production cost. Great opportunity to get into a beautiful trade there. Not financial advice, of course. If we scroll back a little bit further, you can see in 2019 into 2020, we had another rundown into the production cost. Nice wicks below, 3 nice wicks below, beautiful buying opportunity coming into the halving, which of course, this is what we're waiting to see update on this particular indicator, because it's already happened in reality, just not on the indicator. It's not reflected yet, but the cost to produce rose sharply because Bitcoin's production, the hash reward per block for finding a block was halved. So the Bitcoin reward was halved. We get a 100% increase. So a doubling. And in this case, it went from a production cost of, just over $4,000 to $8,000 or so. Now, what we did see in 2020, this, of course, right here, this was March of 2020, by the way. This was the big one. That big crash that has a name, right? Right into production cost. Then we saw Bitcoin hang out around production cost, even dip below. Hey, and guess what? That was opportunity. We did also see a difficulty adjustment down. So we did see this level out with the difficulty adjustment accounted for around that $6,900. So there you go with your 6 nines. And then, of course, consolidated significantly before absolutely ripping to the upside. Time before that, when did we see this tag production cost? Oh, hey, what do you know? It was in 2018 at the actual bear market lows. So we saw a dip into production cost. We got a difficulty adjustment down. It held significantly above there relative to where price was trading at that time. And you can just see this repeats over and over and over again. So essentially what I am trying to tell you is where Bitcoin is now is more than likely, given difficulty adjustments, because you do have to account for difficulty adjustments, we're more than likely looking at a future bear market bottom. So if you are here and you are in this space, understand that it might be a bull run, but this is very likely going to be future bear market lows. So I would not be concerned about being too late. Now, that's, of course, not financial advice. Do your own research. Everything can go to zero, including Bitcoin, right? No, I don't really think so. But in this case, can't say never, right? But in this case, this is one very good way to look at this. I would give it room in any future bear market between $50,000 and $60,000, because Bitcoin, I do believe, as I've mentioned many times, Bitcoin is in a macro sideways and up consolidation, which means that it can run both sides of compression on bands. And we are only just starting to see the etchings of expansion on the longer term timeframes, that is. So this is kind of where I kind of stand on this stuff. I don't agree with those that are trying to map on traditional market cycle theory onto Bitcoin. I look at, as I've mentioned before, I look at traditional markets as running to their own clock or ticking to their own clock. They are a clock in and of themselves. And then you have Bitcoin, which is its own clock. And what you have is, yes, Bitcoin is subject to the forces of this other clock. They are intrinsically intertwined, because Bitcoin hoovers up fiat, and we're measuring this versus fiat. But over time, the forces, Bitcoin is basically going to black hole fiat, is what I'm trying to say. Let's just cut to the chase. It's going to black hole fiat, and it's going to be at an ever increasing pace, but that does not mean that it's just going to go up in a straight line or in the manner in which many people are trying to map onto it. Um, and so far I've been proven right. 2021, I was looking at $72,000 between 68 and $72,000 as being the all-time high, even on the double top area prior to the double top after the Wyckoff accumulation on the daily or reaccumulation to the spring, because momentum was against Bitcoin on the higher term timeframes, including the quarterly at that point. Bitcoin had already put in a quarterly high. Many were looking for 100, 200, 300, 400, $500,000, and I was not. I was looking for that to be the actual highs. Of course, there was conditions that could have been met for it to reach some of those deeper targets, but it did not. And I did not fall into that camp with many others. That's where many of you found me. Now, in this case, just keep an eye on, $67,000 to $69,000. That's the big thing locally. We start seeing Bitcoin push up above there, and we're going to be running the highs and more than likely higher. Doesn't mean it's going to happen immediately. And I would not rule out, as long as Bitcoin is trading and closing below the basis band, I would not rule out tests back to the downside here as well. So it's got to take its time to figure itself out here. Momentum's looking good on the daily. Momentum's looking like it could shift back up in the next 2-day closure, which is coming in 1 day and 5 hours. So it's going to be our Tuesday candle close is when the 2 days is going to come in. And closes above 65,350 would turn this back to the upside. Of course, we still have DMI red. But what we see here on the 2 days, this is a trend indicator. This is your ADX, your advanced decline ratio. And this is basically strength of trend. This is indicating a consolidation. We see this consolidation, test to the downside, run it the other way. To get that expansion is typically how these things work. So essentially on the 2-day, you're looking at something like, like this. So we got this, you get that with the bullish divergence, and then you take off. And this is just a variation of a bull flag. So I don't play patterns. You're not going to hear patterns from me often, but if you wanted to make the comparison, it's a bull flag. So that's where I stand on Bitcoin. We're going to get into a few other things here. And one of those things is I mentioned in the cost to produce Bitcoin, we saw difficulty adjustments down. And you can go to mempool.space and you're going to see that we're not looking at a post-halving difficulty adjustment. And you can thank Casey Rodomar for that and Runes for that. Yes, we're going to talk about Runes today. Now, the difficulty adjustment is going to be coming in around 47 hours, and we are getting an increase. The previous increase was 3.92% difficulty adjustment rate. We're going to go up looking like about 8.4%. It's been oscillating between around 7% to around 9%, depending on transaction fees and how full blocks are getting. When blocks on Bitcoin's blockchain are full, difficulty goes up, not down. It's when blocks are not getting filled, fees drop off the map, difficulty decreases. All right. So when we see full blocks, we see difficulty adjust up. Now you may also see full blocks and difficulty adjust down. There is scenarios where that will occur, but as it stands right now, Casey got all the miners nicely paid. That's for sure. And this is something that we will keep a close eye on, because when difficulty does adjust down, you do get a lower cost basis. So I would say, future bear markets likely to see cost basis, we're likely to see cost basis oscillate right now going forward until the next halving, somewhere around $50,000 and $60,000. And that is the lowest cost basis. That's your baseline. That's not accounting for purchasing hardware. That's not accounting for paying employees. That's not accounting for, that's literal electrical cost per terahash. and or exahash, depending on how big your facility is or how big your miners are and stuff like that. So understand the context behind that. This is something that I will revisit time to time. What you can see is we did also have, something that I may have taken for granted that people understood. But when you see a mining pool mines a block, like in this case, this was Mara. They mine when a mining pool mines a block, they get all of the rewards in that block, including the transaction fees. And the transaction fees are typically shared with the pool of miners. So when I had mentioned this prior, I got some questions of like, well, I'm in a pool, but I didn't get any transaction fees when those blocks are mined or any of these blocks. I just get a consistent payout. There's different types of payout schemes that miners implement, pools implement, and whenever. But what you have to understand is just because you're getting paid because the pool has already aggregated blocks that it's mined, and it's taken the actual Bitcoin reward plus the fee. So it's the subsidy plus the fee. So the block subsidy, 3.125 right now. And the actual fees, all of the transaction fees within that block are then awarded to that pool. Some have different payout schemas that they go by. So if you would like to get more into that at some point, I can discuss payout. There's consistent payout where you're in a pool and the pool has basically a fund of Bitcoin where it's regularly paying you out based on how much hash power you're putting in, versus some pools, if you don't mine a block, you're not making any money until you mine a block, but then that entire block is shared with the pool, and it's weighted towards who's contributed the most. And there's luck and like all kinds of other shit that goes into that. But this is not a mining stream, but if that is something that you would like me to get more into, I will. Now, this is something to keep an eye on, though. Keep an eye on the difficulty adjustment, because that over time will have, a slight effect on the cost to produce. And, difficulty goes up, cost to produce goes up. So difficulty goes down, cost to produce goes down. But in reality, electricity is not getting much cheaper, although miners are coming up with very innovative solutions to basically be net positive, actually making money on production for electricity, at least. And in some cases, very low or zero. That's, new innovations are going to continue to happen within the mining space that will change that over time. Let's talk about this screen here. This is your take or buy sell ratio. We can see that it is positive on this nice low being set in Bitcoin's price, and then has steadily worked its way up. It is not anywhere near critical, so I'm not concerned about this move's legs as it stands right now to either the upside or downside. I'm not looking immediately for any type of a breakout, essentially. Break down or break out, at least immediately as we are streaming this right now. We can also see that relative to where Bitcoin has been in this range up here, we can see, let's go to the daily because this is just getting a little silly because it has been consolidating a while. But we can take a look at open interest, and we can see that we have, Bitcoin holding the lows, but much lower on the open interest. In fact, this was a gap fill on open interest, which is funny to see. On the highs, we had Bitcoin at around 21 billion and open interest a little bit more than that. On the actual lows of open interest coming in at around 15 billion. So essentially, you're looking at like a $6 billion wipeout in open interest. This is a positive sign, especially because Bitcoin has held the lows. The actual wick lows from the move prior, while this move was ongoing to the new all-time high, we saw that coming in. That was the low of the actual range. And you see that open interest actually got below where open interest was on that spike back down into that big monthly zone between 58.8 and 61.350. So Nice big OI washout. Now this is where spot takes over. Right now we have a nice spot markup back to the median of the range basically, and looks good so far. When going back to price here on the daily, we'll do. We can see that if you just fib pull that particular high to low, Bitcoin's right around the 50%, trading slightly above it. If you take the actual closing trend, Bitcoin is also above that 50%. And hey, look, where's the 618? It's at $68,000, likely going to find resistance there on that particular fib level between $68,000 and $69,000, which is also the prior cycle all-time high. You can see above there the upper first, and then the 786 coming in at around 70,500 rather, right across the closing consolidations before the moves down, and then the 888 coming in line with that upper second standard deviation at $72,000. So above there, essentially telling us that we should be looking at the all-time high if it does start closing above there. If you want to look at lower term timeframes, I would use the 4 and 6 hour on a close to validate that thesis. So, it's nothing too crazy. A lot of excitement in the space around runes, obviously, filling up blocks, and we saw massive fees. I don't even think I can scroll back that far now because we are so many blocks away from the halving block. Yeah, there is a way, but I'm not going to try to figure it out right now on stream. But basically, runes are filling up, but people are paying like hundreds and hundreds of thousands of dollars in fees just to etch runes to be, in the first top 9 or top 10 because he hard coded the first rune uncommon goods. And then you had a race for 1 through 9, basically, which gives you your 10, the first 10. And, and then people from there trying to get into the top 15, top 20, top 30, top 40, top 50, that kind of stuff. But it's basically just shit coins on Bitcoin. They have no intrinsic value. They don't do anything. Can there be things done with them in the future? Absolutely. I'm sure people will cook up ways to make them useful, but in general, they are just UTXOs with a ticker on them and a set amount of that ticker that's derived from this protocol, this runes protocol. And they are, well, like anything else, shitcoinery, they're worthless. They're only a vector for, each person that's trading them, trying to make money, trying to make more Bitcoin off of them. So at the end of the day, someone's going to bag hold, right? Now, that being said, there are interesting things about it from a technical point of view. There are no real use cases, as even the creator has mentioned. If you want to make money, you buy Bitcoin. You don't buy this shit. This is gambling. Now, that being said, there are some popular ones that have already gotten listed on exchanges and or are going to get listed on exchanges. If you would like to see what pre-market is trading like and you would like to trade pre-market without spending oodles of money on purchasing lot sizes in these very, very low liquidity environments where people can just list under the lot size you just bought, you can go to a platform like Whales Pro and you can trade them. So this is the Runes Market tab. They have updated this and they have listed Dog, Poi, and Risic, which is just a play on ASIC. And this is basically a Runes ASIC, right? So you can trade them using, in this case, Solana with using them paired with Solana, or you can use them, you can trade them paired against USDC, I believe. So you can see that, for instance, Dog has been trading, and if we go back, I think it hit a high of like a 10 cents or something, and now it's leveled out around 0.004 cents or something crazy. It hit very, very quickly. Yeah, you can see the spike on the minute chart. This is just a very easy way to buy a lot size and sell a lot size without having to, pay through the freaking nose here. Especially when network fees are high. So these can be traded pre-market. Then when they go and they list on exchanges, then you see you can trade them there as well. Whatever you buy here as well is sent to your wallet. This is a DEX. So there's other DEXs that you can do this with as well. But I would be cautious. One of the big things that you have to understand about these runes is the supply dynamics that are etched into the actual rune themselves. So Dog is trading. We've got Poi trading. We've got, this is the next big one that I think is probably going to get listed pretty soon. Trading at around 1.7 cents. This is one of the bigger ones. Between the two big dogs in the room, from the base chain that have not had other things like BRC20s and shit like that. You've got basically Dog, which is from Runestone, and then the Risic runes, which was these Risic miners that were ordinals that were mining these runes, basically giving you a pre-allocation prior to the runes being released. And you can see that this had a massive run up to like $32 or something. This is not, I do not believe that these were real. I don't think there was really any buyers or sellers there for those lots. I think that is a, there's a lot of people making a big deal about it. The other one hitting 10 cents and this one hitting like $30 or something. I think those are outliers and not actual trades. I don't think people actually spent money on those. But they could have been larger transfers that are just being reflected that way. And then they can go and they can say, look, see, nobody actually paid. They were transfers and they just happen to be picked up on the exchange. And then they can go on social media and repeat that over and over again so that they can fill your head full of bullshit. One of the things you have to understand about pre-market on anything, if you're trading on Ordinal's wallet or Magic Eden, whenever that starts, or Unisat and Marketplace, or whatever it is that you're looking at. One of the things you have to understand is to get listed on an exchange, the exchange needs liquidity. And the way that all of these shitcoin exchanges work in general is that whoever has whoever has produced or made that particular coin, let's call it, what happens is they have to do one of two things. The team has to go to the centralized exchange and say, hey, I want you to list my coin, whether it's Dog or Risic or Satoshi or whatever it might be, right? And the exchange is going to say, okay, you need to give us X amount of that coin as liquidity. So basically you have to pay us. You're either going to give us X amount of coin or X amount of stables to pair it against, right? Because there has to be liquidity, and they give this liquidity to their market maker bots. Because you need, in order to have a functioning market, if you just list a coin, all you have is sell side pressure until new buyers come in, and then it just gets crushed and nobody goes anywhere, and it just falls and falls and falls forever until it gets zero and delisted. So what you need is you need a market maker, and the exchange has to step in the role and play market maker, and this is done via bots. And this is not malicious. At least in most cases, it's not malicious. Unless they're booking against you, that is malicious. But market making is not malicious in and of itself. So they basically the exchange gets this liquidity and uses that to take the other side of the trade so you can get fills, right? Until there's enough participants in the market. You'll always still have a market making bot, right? It has to work that way. It has to match liquidity. So you'll get this, once you start getting participants, in, then you have more liquidity to play with, and it's not just you selling to the SEX's bot or the centralized exchange's bot. Just say that a lot. Just say sex all the time. Anyway, what you see on any of these, and let me pull up Satoshi, because this is one that was interesting. So I didn't mint this particular coin, but I ended up trading it. And this was upon listing, and I'm going to show you why this happened. Now, my suspicions are that Satoshi, the coin here, it did have a pre-mine, and that pre-mine, I do believe, was because they wanted to get listed on exchanges. So they went to the exchange, or it could have been an exchange itself, right? It could have been Gate.io that deployed this. And likely, what you see is this massive run up on the candle here. And you're probably thinking to yourself, like, okay, who, from the second that this got listed, it went straight up. Now you got to remember, most people don't even know it's listed yet. So why is it going straight up? Who's the buyer? Well, in this case, if you have given the exchange any of this coin, or you've paid them in the stable, what do you get? Well, you got to get liquidity in the market. So this 1 minute candle is the market making side of things. So this is all prepaid. This is not based off of what you saw in those peer-to-peer markets. So those peer-to-peer markets where you have this asynchronous trade, right, where you have basically your Craigslist of trading or your eBays of trading. It's not an auction, so it'd have to be Craigslist, and it's usually not negotiable unless you go OTC and contact the seller. But in this case, you're seeing the candles go straight up, and then you get market participants. You see the sell-off. Okay, I'm going to sell my bags. I've made money. I made a bunch of money. I'm good to go. And then it ticks up, makes a high, and then starts to consolidate a bit here before more people find out that they can go and they can sell, and their bags are worth a bunch of money, right? Now, this is all of this move down is also it's a mixture of people, and it's a mixture of essentially an automated market maker or a bot grabbing that liquidity. Now, this is paired against USDT. You're likely going to see most all of these be paired against USDT. So an exchange has to do a couple of things. They have to load up the market making side of things. If they don't load up the market making side of things, you're not going to get listed. There's two ways that they're going to do this. If your coin is popular enough, they're going to go buy a bunch of it, which means that on all of these markets, your Unisats, your Ordinals wallets, you're going to have an exchange come through, and they're going to sweep the floor because they want the liquidity for the coin to go against their USDT or USDC pairings. Now, they already have a pool of liquidity for USDT and USDC, right? So this is this is likely what you're going to see. Now, the big one shot with Risic that I'm going to call out as not being a valid buy or sell, more likely a transfer that was picked up on the dexes, is comparing that to and this is likely that liquidity was injected to an exchange, by the way, for the listing. All right, I'm telling you that right now. I've been around the block a little bit. All right, that's likely what you're seeing there with that big move up and big move back down, all within the span of a couple of seconds. That's not going to be humanly possible. Somebody's not buying that $30 at whatever set amount of Risic that is on those secondary markets after mint. Likely what you're seeing is that's preparation for listing. That's liquidity for listing, whether it's Risic listing or whether it's, an exchange of USDT for a transfer, and then it gets picked up. Like, it's okay. So understand that that's likely what you're seeing. That is not going to be like the ultimate value of this thing. Who knows? It could go to $1 million. That's probably unlikely because of its actual supply side. But what you got to understand is, because there is nothing but supply when you first list a coin, there has to be the other side, right? You have to have the market making side to start things off. It just gets things rolling. And then it keeps a surplus to keep that market rolling, right? And one of the things that I want you to make a comparison of is, if you look at this nice smooth curve, this nice buy up of dog, and then this nice little curve down and then back up. Now, the reason why you see a nice curve like this, and this is actually the creator of this particular coin, like him or not, has said he will not pay for a listing. So what does that mean? That means that if an exchange wants to list it, they have to buy it. They have to buy it, and then they have to liquidize it with the pair that they want to pair it against, whether that's USDT, USDC, or Bitcoin. Now, in this case, I have no idea what's going on with some of these. But what I will tell you is this is the mark of I'm not selling to you, I'm not paying you to list my shit. If you think that it's worth it, then you list it. Otherwise, it's going to trade on these secondary markets, these DEXs and stuff like that. So what you have here are many of these DEXs get fired up so that exchanges can grab the nice coins. This is the same thing, by the way, that happened with Pepe. All right, so it's the same thing that happened with Pepe. It's the same thing that happened with People. It's the same thing. So this can be repeated over and over and over again. And essentially what I want to tell you is, and this is very important, if you see something that everybody's going after and you missed it, you missed it. Don't chase. Right now, there's ways for you to go and profit off of the price movements of that without having to chase it. I missed Satoshi. I didn't get into the mint. I wasn't going to get involved. Fees were very high. People made tons of money. I know, but I can't chase it. That's just not what I do. That's not how I trade. So what I did is I waited. I heard about which DEX or centralized exchange it was going to be on. I got on the centralized exchange and I shorted it. Why? Because I know that the supply side, because of the dynamics of how that coin was deployed and lots of 100, means that 21 million supply means that you have 210, you have an effective supply in this original peer-to-peer market system. You have an effective supply of 210,000, not 21 million, which means that you have a concentrated holder base that's going to want to take profits. If you have a concentrated holder base that wants to take profits, guess what? It's ripe for a short. As soon as the market maker gets its fills and liquidizes that market, it's time to get short. That doesn't mean you stay short the entire way through. That thing's probably going to rebound very, very well. But you can make a ton of money. And the nice thing about being on a centralized exchange is you're not paying for the coin, but you can trade it. And you can lever up. There's a 40% drawdown on that particular coin. If you're just 3x short on that thing, guess what? You're up 120%, right? So if you're going more than that, higher leverage, you're 10xing it, you're up 400%, you know. Now, does that mean that, you know, people who 10x'd from the listing, you know, are wrong? No. But that doesn't mean that you can't make money. All right. It's all about what is going to fit with your trading plans, and then you go for that. So one of my biggest points with this is that I'm a trader, and most of the people that come here to watch my streams or videos are traders or learning to trade. And when you're involved in a market that is pre-market before listing, yes, there's a lot of gains to be made. And I don't disagree that you can make a ton of money. once something gets listed. In fact, you should probably hold in many cases if you're looking at stuff like the whiff guy and like all of those guys. In fact, what did they do? What did the whiff guy do? He sold out on that initial, and it's funny because he's the one who got the freaking coin listed on exchanges. It takes off on the DEX. He sells out before it's even hitting some of these exchanges, and it goes thousands of percent up after the initial consolidation, after the sell-off to consolidation. And that's this right here. That's what I'm talking about right here when I show you this chart. Like, what is going on? How in 1 minute was there any buyers from the moment it listed that pushed it all the way up? Well, guess what? Part of it is because they have supply, they have the USDT liquidization, and what they do is they push all the price up, and then they start selling when the sellers come in. And that's why you see this downtrend, because they're applying that selling pressure because they had the listing. They got to make money on it too and fund the other side. More importantly, it's not malicious, because if they don't fund the other side, the whole thing is going to go to zero and you're fucked, because it's all just supply side at that point. You need the demand side. So they have to fulfill both sides. And when you get an initial listing, they have to fulfill the actual buy and sell side as people onboard into this particular listing. So that's where you see that they make a good amount of money selling at the tops, right? And they're picking up the bottoms too on the other side. As more and more participants enter and trade this coin, you're going to see a nice consolidation. You're going to see another upside move, in my opinion. This is not going to trend to zero. I think that it's far too popular right now to do something like that. But this was the initial. Then you get the reaccumulation. Then you go for the upside again. And you're going to see that across the board. So please don't chase. If you miss something, you missed something. There's been quite a few that I've missed, and that's okay. There's quite a few that I'm going to get airdropped from that ecosystem, and that's fine too. I'll probably hold and maybe even buy more when it lists. I don't know. I have to look at it at the time. But understanding the dynamics of what's happening and why are very, very important. And if you did manage to mint some of that stuff, you're probably going to be in for a very, very nice payday whenever that lists. And maybe even if it doesn't list, there's still plenty that do very, very well on those peer-to-peer exchanges. So, and DEXs. So a lot of them are actually getting on DEXs now as well. So you're going to see price. You can also arbitrage. So if you see something listed really low on Unisat, for instance, and it's starting to take off on the DEX, buy it on Unisat, sell it on the DEX. Now you've just done what's called an arbitrage trade. And you get in and out very quickly. So there's all kinds of ways of taking advantage of this kind of stuff. It's just a matter of understanding what's going on so that you can take advantage of it. And if you're just a pure minter and you're just minting all of the shit coins, and you're probably going to get a percentage of those that are going to just absolutely melt faces, and a percentage of those that are just going to do nothing and go to zero. And or just be listings that sit there forever, which is effectively zero. So understanding that is very important. And being careful in how you handle it, and being careful with FOMO is very important. So you're not going to miss out if you're a trader. Trust me. You'll be just fine if you know how to trade and you are trading and active in trading. Unless you are not very good at trading, you're going to be just fine. Excuse me. All right. So I think it's time for me to open it up for questions if people have any questions. I'm not currently watching chat. Let me go ahead and jump into the different chats here and see if I can answer any questions for you. Well, shit, I wouldn't be able to see any historical chat in X anyway. Damn it. My multi-stream chat view is not showing me anything either. Why is everything broken? Let me go ahead and kick on the music. We'll bring it to a lower level today. And See if there's any questions. All right. So we got some beats going on underneath my voice here. Hopefully they're not competing too much here. Let me go ahead and look in the chats here. Hello, Spin. Hello, Don. Hello, Bobby. Hello, I cannot pronounce your name. Much something. Good morning. So we've got a few people chatting. I'm not sure. I see there's people in other chats, but I don't know if they're actually chatting. But if you have any questions, go ahead and hit me up. I'll try to get them answered for you. By the way, this I'm not endorsing this particular platform, Whales Pro. There's other platforms that are also listing this stuff, so they are decentralized exchanges. So you find the one that is safe and real and works for you. Yeah. So, cycle tops are 100K, comes back down, scares the shit out of everybody at 60K. I think more downside. Cheat code says buy 60K area. You know, I don't know about potential topping areas. We'll be able to identify those when they get there, when it gets there rather. You know, could 100K be a top? Maybe an intermediate. I don't know about a move all the way back down 40 to 50%, but can't rule. Those that do can get close. That's just not, I mean, we can see the areas of interest, you know, at 100,000, 115, 130, so on and so forth. But, you know, those are the immediate macro areas to be looking for, you know, beyond, you know, $90,000, right? But, you know, Bitcoin has to first break out of this consolidation, whether that's to the upside, that's going to give us a lot of information, right? If it is to the downside, I think that we are going to be in a prolonged cycle. And that cycle might very well last much longer than people think. So I am of the opinion that when Bitcoin breaks out, we're likely to see a top much earlier than people think. And and then the other side of that is that I don't think that that would be the actual top that people are looking for. But it would occur much quicker than I think people would expect, and go into a longer form correction that then would result in a much higher high later. Whereas if Bitcoin were to break down from here, I think that it's going to consolidate for far longer than people think. Doesn't mean I'm going to be right, but that's my current read on it. Don says there's an issue with the sound. Oh, you guys would have to let me know if there's any issues with the sound. I have no idea. I can turn on my monitor speakers. Let me blab for a minute. So test. It seems to be fine on my end, done. Hi, Sam. Well, it seems to be fine on my end, unless, you know, if you can even hear me saying this. So it might be on your side, buddy. Maybe restart your application that you're using or web browser. So for those of you that are jumping in a little bit later to the stream here, definitely go back and watch the beginning, from the beginning. Obviously, you don't have to sit there and listen to all the music, but in the pre-stream session, but definitely go back and listen to the analysis. Okay. Don says it's on his end. Yeah, so if you have questions about what we talked about, let me know. I'll give it another minute or so. If I don't see any questions coming in, I am going to end the stream and get moving on with the rest of my day here. Had some very nice trades today and over the weekend. Really nice trades. Are ordinals dead? Now this depends on your question, on really what the core of what you're asking. I don't think ordinals are dead by any stretch of the imagination. I think that they are barely getting started for this particular cycle. And I am talking ordinals themselves, not runes. Now, many of the rune projects, as we move to the degen chart while I speak here, we can go even more degen. We can go to 15 seconds. Oh yeah. Now, ordinals that were basically glorified rune miners or redemption tickets for runes are probably going to see very violent pullbacks, like the rune stone, which was, at one point nearly trading at 0.09 Bitcoin, but now is somewhere around 0.035 or something like that, 0.037. Now, that was a glorified redemption ticket. Once the snapshot of all the wallets that hold it were taken, then they get the rune token, so the meme coin. They then sell it for a profit, and why would anybody buy it? Well, the only reason that you see people buying it is, one is provenance, and it's the token, it's the rune stone, right? So there's that, but then there's also that the particular person who deployed that has stated that there's not just one rune token if you hold it, but there's three. Also, within that particular ecosystem, many projects that launch are using that as a gate. So it's like a private community. If you have, this stone, then you can come buy our shit. And so it's a glorified redemption ticket, right? Still. And then there's also other projects that have said, hey, we're going to airdrop our meme token if you hold this thing. So that's why you see it bottom out and start moving back up. And I suspect that it's going to move up in a very aggressive way when the next meme token drops, especially if this particular token dog does well, right? The same goes for the Risic miners. They mine Risic right now, but it's been stated that there are plans to not only mine further Risic, but also adjust to mine other things, because just like miners in the real world can mine multiple things. I wouldn't. You can mine BCH and BSV and other shit like that with an ASIC miner, but that's not where you're going to make money, right? But you understand what I'm saying. It's got, they're planning other use cases. That's how they're going to prop the floor price or the value proposition for those things up. but in general, they are nothing more than glorified redemption tickets, right? Like, so if you're not specifically buying it for art and the art's sake, then, you know, which already doesn't have any utility and there's no promises of anything coming, then I would expect it to trend down. You know, and you will get buyers as they incentivize it. You know, these development teams incentivize it. Some will be straight up abandoned. It is not cheap to play this game from the development side of things. So I would not be surprised to see a lot of stuff just go straight up to zero effectively. I mean, you can have a market with a floor price, but if you have no buyers, it's zero, right? You got to understand that. You can look in your portfolio all day for ordinals and you can say, well, I've got X amount of Bitcoin in ordinals. And it's like, okay, well, how much of that can you actually find a buyer for? Right? So that's something that you need to understand about that market. That's why it is gambling. It is an asynchronous market where you are listing and buyers have to come by. There is no way to short. There likely will be ways to short ordinals to take leverage contracts out against the potential future price of them. Probably only on the majors, your OMBs, your pups, and stuff like that, because they're also going to have these Rune tokens that are likely going to get listed on exchanges. So you're effectively taking a long or a short against those particular underlying things, but they don't serve any purpose and they're not attached directly, and there is no direct correlation. It's like, you know, everybody says like, whoa, look at Rissix and Runestone's market cap pre-runes, and it's like, it doesn't matter. The runes are separate things. It doesn't matter. You don't get to transfer market cap. That's not how it works. You're not transferring market cap from this thing over to this thing. That's just silly. You can make assumptions based on the price that you're gonna get liquidity that moves over in a relatively equal way. But again, that's an assumption, right? So and in many cases, I mean, some of these rune projects are coming out and their market caps are way bigger than the ordinals cap was. And that's all because of what people are listing as. So if you have a base floor that the listings are at, you're going to get a base market cap. So, it's just kind of, it's just kind of the way things work. It's all, unless you have, and this is where, for those of you that come from originally listening to people who would tell you that the market maker is out for your money and your stops and your liquidations, this is where they really sound super foolish, because without a liquidity provider, you have no market. You have an asynchronous market that is not up to the second, or millisecond. You have a market that waits, which is then an asynchronous market and not a synchronous market. And it's just not it's a recipe for supply side pressures to take over. It's a recipe, honestly, for very high volatility environments. I mean, just go look at this. I mean, this may not look like much, but this is high volatility. From 0.00288 cents to, whatever this is at 0.005 cents or something silly like that. I mean, if you go down to the minute chart, you see this big spike. But again, just like, this was a spike all the way to just under $1. So, and from the supply side of things, just under $1 is fucking massive for this thing. It's unrealistic, and no, it did not actually have that amount of liquidity. And it's just like the Risic, it just spiked up to 30 versus this one went to $1, and it's all relative to market cap. And likely what you're seeing is a giant transfer from people who were minting, and then it's recording that kind of stuff. But this smooth curve, this is a very volatile move up and then even back down. It doesn't look like much, but it's very, very volatile. A move from the highs up here at 0.005 cents down to 0.004. That's a pretty big move. and we don't quite get the tools to really look at this in the proper way that we would chart it. But it's the same for Satoshi. This is a violent move up, and this is a violent move down. I mean, that's a more than 40% move down off the high, right? But again, this is the liquidity candle, right? So this is essentially you're making the market here, right? So, and you're either paid to make the market, right? So you're given the liquidity to make that market. I know a lot of people are like, oh, you got to pay to list. It's like, no, you're giving them the liquidity so that they will list your item. Otherwise, they have to provide the liquidity and buy your item to list your item. So it's just, two different methodologies. But they once runes are out, they are no longer attached to the original thing that you are buying and selling, your profile pictures or your stones or your little rune mining things. They don't mean shit. They're just redemption tickets at that point. If you're asking more of like, do I think that pups and OMB and like all these larger community projects, art projects are going to do well? Yeah, sure. I don't think there's anything wrong with them. Fundamentally, they weren't built on this runes rage that's going on right now. So purpose-built runes projects probably going to hold themselves up until they deploy their runes, and then they're going to have to keep incentivizing you to hold that thing, or else it's going to dump to zero basically. And again, I want to be very, very clear. You can list it whatever price you want, but if there's no buyers, it's effectively worth nothing, right? Because it's not worth it for anyone to buy it at that point. So that is effectively zero. And I will tell you that if you're going to go and you're going to look at things to mint, be aware of effective supply. So when you have lot sizes on this stuff, what you need to understand about this is, let's say Feu right here that's still minting. They did a big old pre-mine of 110 million, whether that's for airdrops or listing or whatever they allocate that to, doesn't really matter. What does matter is that they have 110.2 million circulating supply. So they still have a bit to be minted out here. 110 billion rather, right? Or is that 110.2 million? It is 110.2 million. But what is their effective supply? Well, if you go to mint it, you got to look at what your lot size is. So your lot size is actually 1. So this is not a bad one. This is actually keeping its fully diluted cap will be what is listed. Let's go to this one. Pepe Matrix, 6.9 billion. It's minted out at, what are the lot sizes? 69,420, of course. So your lot size is effectively, you divide by your lot size, and that gives you the true effective supply. And the Satoshi one is the one that I used as an example. I think there were 6, yeah. So they had 21 million, but you're minting in lots of 100, so you're effectively looking at knocking off 2 zeros there for your 210,000 as your effective supply with a decent holder count relative to what runes are doing. But you've got now you have to take and effectively divide 210,000 by 20,000 to get your true circulating supply held prior to hitting market on a centralized exchange. So just understanding the dynamics of those tokenomics from supply versus how many are held. And it's the same thing that happened with Pepe. If you missed Pepe, you weren't paying attention to Pepe, it's the same thing. and it did quite well on exchanges, and you could trade it and make a lot of money. So don't be worried about missing out on that stuff. If you mint it, you're gonna make an exceptional amount of money right up front. And if you're willing to exit and then buy back in later, you'll probably make that money 100 times over, right? If you play your cards right and the project is good and it's got traction. If it doesn't, then probably your mint to sell is probably going to be your best trade out of that. But that's something. These are things that I don't focus on this channel, but are worth knowing, I guess. So, hope that answers your question. Heard me mention. Hey. Yeah, so effective supply and holder distribution are going to be your two biggest metrics that you want to track. Once it lists, unless the exchange is doing the bundling, like a lot size, like 100, like you saw when Pepe first launched on a lot of exchanges, it was 100 or 1,000 Pepe. People was 100 or 1,000 in terms of lot size that you were trading. Your effective supply is cut down by however many zeros are in that lot size, right? So now they have since gained enough in terms of value that they can be traded as individual tokens since, right? So they're no longer traded in lot sizes of 100 or 1,000. And you're probably going to see, a lot of these runes that get listed do the 100 or 1,000 or whatever. They're more than likely not going to do like 69,420. It would be hilarious if they did, though. Get at least one exchange, maybe KuCoin. I hear that you got to pay to get in, though. It's pay to play over there, pretty high, and over what it would be to provide liquidity. You're basically effectively providing liquidity and paying for the listing. I haven't listed there, so I don't know for sure. Yeah. Yeah, I mean, cautionary tale would be the whiff guy. Sold out for like 10 grand profit. Nice flip. Beautiful trade, but then could have had like millions or something of dollars or something like that. But he sold the market maker pump. He sold the liquidity pump. That was literally adding liquidity to the market so that it could be tradable. That's what he sold. And then it came down, reaccumulated, and then got shot out of a freaking cannon. Like you're likely going to see that with the big major players. Your Dog, your Risic, your, I don't know, whatever other ones are popular. Pepe with honkers instead of honklers. Or, right? Was it Pepe with or pups or something? I don't remember. But yeah. It'll hit a mania phase. I think it's gonna be quick burnout on a lot of them. Bobby says runes are BRC 20s all over again. Just another pain in the ass. Look, I don't disagree in terms of what they are as a thing. From a technological standpoint, they are much sleeker and less of a negative, even though they are a negative on the network, than BRC 20s, because they are attached to the UTXO. So they are UTXO side, and but there is still the problem of front running if people want to mint. And that's just the nature of the way that Bitcoin works. It's not that there is a problem that like front running is a problem. like Bitcoin's broken in some way. No, it's that the bug is this stuff, and Bitcoin and exploiting the way that Bitcoin works is leading to front running of mints and sniping of potential buys in ordinals marketplaces and stuff. There's things that can be done to mitigate that. By the way, it's not actually not that difficult. An automated market maker, if someone wants to create a rune coin, they can pre-mint or pre-mine that particular coin, go to a marketplace and have a structured sale of that particular thing, and then you don't get front running. There's ways to do that. And it's usually via whitelist. But even on the same whitelist, because of the way Bitcoin works, if your transaction gets there before somebody else's and it's out of the allocation, whoever's transaction got there last is, well, they just spent a fee for nothing. Now that's very different than sniping, which is somebody sending you sending something to a receiving wallet and somebody sends it there faster. You don't lose anything, by the way, if somebody snipes a buy that you're trying to buy. They literally just spent Bitcoin faster than you, and they replace your transaction, which means you get the whole transaction back, fees included. So, because effectively they're replacing it and paying for your entire transaction, and replacing it with their own. It's just that, the PBST, as soon as it sees that, will send it to them. But once that's gone, I mean, it's not like it can, when the receiver sends back to whoever got there first, that transfer cannot be sniped. It's impossible. And no, you cannot snipe Bitcoin from somebody. If I'm transferring Bitcoin from one wallet to another or from someone to someone else, you're not going to be able to snipe it and get my Bitcoin. If you tried to replace my transaction that I'm sending to a friend, for instance, all you're doing is paying my friend for me. And thanks. I'll take that every day of the week because I like to keep my Bitcoin. So useless tickers on UTXOs are basically what it is. Yes, 100%. The only reason that it has value is because somebody will give you Bitcoin for it. Because you have X amount of this ticker symbol. I have 100 Satoshi Nakamoto on this UTXO. If you're willing to give me money for it, then we have a market. Other than that, it's absolutely valueless. It is simply a UTXO. And it's only worth however many sats are on that UTXO. That's it. So essentially, when you look at like pure network, like most ordinals, for instance, are 546 sats. People paying like thousands and thousands and thousands of sats, millions of sats for a 546 sat thing, a transaction. But in this case, in the ordinal side of things, it's because it's got value. It's got art that's been pre-inscribed or inscribed on chain. And that is the value proposition, right? So technically, yes, they're paying for a stupidly low, worthless transaction to be sent to them, or UTXO to be received back in their wallet. But what's the real value there wasn't the pure analytical value that you see on chain. It was the value of the item that they got transferred, right? It was that piece of art that somebody had sold to them. And now you're buying from them, or they're buying from you. They find value in that, you have a market. I don't believe that anyone should stand in the way of that. And until it's something that cannot be done on the chain, I don't have a problem with it. And from the mining side of things, y'all are making me very, very happy. Because those fees, depending on your pool and depending on the payout schema that you are using, or that your pool uses to pay miners, you are likely making a lot of money right now if you are mining. And man, I got a lot of heat last year when I said that I was purchasing mining equipment and racks and upgrading the racks and like all this shit at a cost basis, a power basis that's set at 2 cents per kilowatt hour, so fucking low as hell. And that's actually been pre-negotiated for 10 years out and can go down depending on how the facility handles their partnership with the gas company. So, I mean, I kind of knew that fees were going to go sky high. One, fees already started getting really high, relatively speaking, when ETFs were announced. Now you add runes to that, and it's insane. I mean, we're seeing median fee values of over 100 sats per VByte, which makes small transactions very difficult, and or the value proposition of sending any Bitcoin is very anything, you know, in any kind of a smaller denomination, you're spending, you know, sometimes the fees can be more than what you're trying to send, so it's not even worth it. Which is where the argument comes in from filter crews, like, this is not sustainable and this is not how this should work, and they're right. So they are right. So what's going to end up happening? Almost all this shit is going to be pushed to layer 2. Fees will come down, and those layer 2s will settle on layer 1 in bulk. That's how it's going to work. So whether or not, you know, I was in a Spaces the other day where they were talking about forking the network, and it's like, you guys are stupid. Go ahead, you can fork yourself off the network, become the new ORDS BSV or ORDS BCH. Like, it's gonna, you know. And then, like, the argument for larger block sizes, go look at the examples of larger block sizes. You can just kind of fuck yourself. No one wants to do it. There's no incentive for miners either, by the way. There's no incentive for miners to fork the network. You have to make a monetary incentive for me to join a different network and contribute my hash power. And there's no economic incentives there. There's no way that you're going to be able to make me more money as a miner than Bitcoin's going to make me. So good luck. It's not going to happen. So all of that fear and FUD, just, it's fucking stupid, and it's not going to happen. Now, what will likely happen, and what you're going to see more of, is layer 2 development on Bitcoin. And you're going to see that because the solutions for layer 2s right now are not sufficient to solve the problems that we are currently seeing in terms of just regular transacting on Bitcoin, because the fees are so high, that it makes it infeasible for smaller amounts of denominations to be sent without literally spending more than what you're sending. Well, that will be inverted very quickly as soon as we see these layer 2s that are being cooked up. There's many good ones that you're probably not even going to hear about, that I have heard whispers of, that if deployed in a manner that works correctly, will process things layer 2 instead of layer 1, that are going to be able to make entire markets that you're going to see runes move to, you're going to see ORDS move to, you're going to see all kinds of stuff move to, and they can still get to have all of the features that they're using directly on layer 1 now. And that stuff takes big players in this game to develop. Okay, it's not just your one-off guys here and there who may or may not have funding coming in for their special projects to deploy new things on Bitcoin. But everything that we see in Bitcoin right now is occurring within the consensus model. The argument is that the consensus model needs to be updated, and we need to form new consensus around stopping what is occurring right now, so that transacting on Bitcoin is feasible in lower denominations, and it is not an exclusive network for whales. And that is, it's an ongoing and nuanced debate. Features that might be added that are being discussed, like OpCat, I don't think they're going to happen. I think it opens up far more than it needs to, although the argument is that it will further enable the robust development of layer 2s. I think that there's far sleeker solutions than just opening up the OpCat command for that, because there is way more bullshit that can occur with that command enabled. There's other things that can be produced that can have the same effect and can still be done via layer 2s. But again, has to be well funded. Has to be a well-funded endeavor that actually can gain traction and has market appeal. So it has to enhance, it has to solve problems and enhance the pilot market that is currently being developed on Bitcoin. So, and unless it can solve problems, fees, front running, sniping, and provide additional value, it's not going to be successful. So otherwise, you know, while maintaining the appeal of being able to settle on layer 1 and inscribe things on layer 1. So it's, you know, Slipstream is a stopgap for that. Probably going to see more of those types of things. Those are not layer 2s, those are services. Where you're basically buying out an entire block, and not many people are going to have the ability to do that if they want to, you know, get a project running on Bitcoin. That's for sure. But yeah, it's I think that there's a lot of cool stuff, and I think that we need this kind of stuff in Bitcoin in order to push innovation for layer 2s, because it was stagnant for so long because so many development teams were interested in altcoins. Whereas now this brings the focus on Bitcoin. It's like, okay, well, we have these problems that we can see. Like, yeah, we want to be shitcoiners, but we also know that there's limits to what we can do, and we want to be able to do these things. So how do we solve for this so that we can still be degenerate assholes, but also have a functioning network-based layer that is good for everyone, including us, right? So there's that, and people coming around to that, and more people entering the space. And I think that Casey's stunt with runes and the shitcoinery on Bitcoin is going to just draw more people into it to enhance further development of Bitcoin layer 2s and solutions to what is occurring on layer 1, so that we can all benefit and have our cake and eat it too, because eventually that will be the case, I believe, because Bitcoin is where people want to be. So I think I'm going to end it there. You all have a wonderful morning, afternoon, and evening. I will leave the stream up with some music playing for those of you that want to kind of make notes or review or trade while you're listening, as I know some of you do. I've seen plenty of you hang out like right up until the moment I end the stream. Whether or not that's because I lulled you to sleep with my dulcet voice, or bored you to death, remains to be seen. You'll have to give me feedback on that. But either way, take care of yourselves. Please trade safe and stay safe. With all of that said, Landy out.